Good afternoon, everybody. This is Guy Swain. I'm one of the wealth advisors at LifeTime Asset Management. I want to welcome you to our latest episode of our Lifetime Learning Series webinars. I've been looking forward to today's topic for quite some time. I think it's going to be a pretty interesting topic, I think, for all of us. The topic is the economy during and after the pandemic. And we're featuring Dr. Mike Walden of NC State. But before we get started in this, let me encourage you to reach out if you have any questions that you would like to ask Dr. Walden during the presentation. If you would go email them to info@lifetime.com, info@lifetime.com. And if we have an opportunity, we'll get to all the questions at the end of the presentation. If there's any left over, we'll reach out to you and try to answer any of them that we have left over. Also, we're going to be recording this session as we have been recording those in the past, so you can do all the binge watching you would like to. And one of the reasons that we have had such good participation in these webinars is that people have been sharing these sessions with friends and family, so keep doing so. It's open to anyone that you would like to participate. And we're extremely fortunate to have Dr. Mike Walden with us today, so I'll introduce him if I may. Dr. Walden and I were speaking earlier. I came here to Raleigh in 1982. He came in 1978 as professor at NC State. Somewhere in the mid-'80s, I ran across him presenting somewhere, and I forget how many thousands of presentations Dr. Walden has done over this period of time. But he is a William Neal Reynolds Distinguished Professor of Extension Economics at NC State. He got his Ph.D. from Cornell University and has been at NC State, as I said, since 1978. He's also been a visiting professor at Duke University, has served on a lot of state and local commissions over the years as well. He teaches at NC State, obviously, agriculture resource and economics, and does research and extension responsibilities there as well. I think we have a little bit of an update to his bio. I think he's now published 13 books, some very interesting ones. If some of you guys recall, I think this is the 5th time that we've had Dr. Walden to speak to our group, and I think 2 times ago he was presenting to us, and he had a new book out that we presented to everybody at the time. And we'll see his latest books, very interesting topics, so we'll hear a little bit more about that from Dr. Walden toward the end of his presentation. So Dr. Walden, thank you so much for participating today and sharing your expertise with us.
Well, Ken, thank you, Guy. My pleasure to be here. You always put on a good show, Guy, and you have great people. So I do appreciate having the invitation. Wish we could all be in person, but we need to be safe. So this is fortunately a technology that I'm now very used to. And Guy, you're going to advance my slides. Is that right for me?
We're going to have Christine to do that. Yes.
So Christine, you can go to the first slide. So I want to talk about, Christine's getting that ready. I want to talk about the economy in 3 parts. First of all, give you an update on where we've been with the pandemic and some of the key economic facts. Secondly, where we're going in terms of the economy. And when I do that, I'll bring in a little bit of implications for investing. I'm not an investment expert. I'll leave that to Guy, but there are obviously key economic factors that affect investing. So I'm going to highlight those as I get through. And then the last part of my talk will be talking about long-run permanent impacts from the pandemic. Most economists think this pandemic and the recession it caused is going to create what we term an inflection point in the economy. That is, the post-pandemic economy will not be the same as the pre-pandemic economy. So I want to highlight some of those impacts for you. All right, next slide, Christine. The economy going into 2020 was very good. So this is pre-pandemic. And this is one reason why this has been so challenging, this being the recession and the aftermath. We had a good growth rate of 2%. We had rising real wages. We had a 50-year low in unemployment. We had low inflation. And we had set a record in terms of economic growth, sustained economic growth without a recession. And we thought we were going to continue that in 2020, but obviously that did not happen. Next slide, Christine. The pandemic, COVID-19 came. The problem with this virus, and there are always viruses that pop up, as I've read every year. The challenge for medical people is to figure out which of those can turn into a pandemic or be easily spread, and how deadly are they. This one met both of those conditions. It was contagious, it was deadly, and in that sense became, unfortunately, our worst nightmare for 2020. Next slide, Christine. Now, once we realized the virus was here, which was around a year ago, or maybe a few weeks from now, the medical experts told policymakers, this is going to be bad, this is going to be potentially deadly, and it could overwhelm our hospital system. So we need to do something to reduce the spread, and that meant things like stay-at-home orders, shut down some industries like hospitality, restaurants, et cetera, where people are packed together, sporting events, et cetera. And that was mostly done at a state level. Most states ultimately did this. We did this in North Carolina around mid-March, I believe. And once that happened, economists knew this was going to cause a fairly severe recession. Next slide, Christine. And we thought this was going to be a deep recession, but it was going to be short-lived. And in fact, the numbers seem to bear that out. With the second quarter, April, May, June was the worst. We had an annualized drop in the economy of 32%. The actual drop was 9%. The annualized simply means if we extended that for an entire year, how much would the drop be? It doesn't matter. Both of these numbers were records for one quarter. Next slide, Christine. To show you what it has done to the employment situation, left-hand side is U.S. change in U.S. jobs in millions. Right-hand side, change in North Carolina in thousands. You can see on both slides, April was the worst month. Nationally in April, we lost about 20 million jobs. Here in North Carolina, we lost about 600,000 jobs. Now, interestingly, once the shutdown orders and the restrictions on activity began to loosen in May, the economy actually began to pull out of this deep downturn. And you can see by the slides that we've actually had job growth from May through November on both the US and North Carolina side. Now, I don't have on here, but I'll tell you, a couple of weeks ago, we had the December numbers come out for this nation. We don't have those yet for North Carolina. And we actually had a drop in jobs in December, first time since April. And that's due to the resurgence of the virus. And that's one reason why I think we obviously need to take this seriously and worry about getting this resurgence under control, because clearly there's a link there. If the virus is spreading more rapidly, we're going to have more trouble in the economy. Next slide, Christine. Next slide. This slide just shows you those same changes now on a percentage basis, percentage of the job levels we had in February before the virus. You can again see April, worst month. We lost about 12% of our jobs in North Carolina, about 14% in the nation. Again, growth from May through November, but again, we turned around a little bit, had a couple steps backward in December in the nation. And my guess is we're going to see that same backward step in North Carolina when we get those numbers in about a week. Next slide, Christine. Unemployment rate, same picture. Big jump in April, improvement since May. I do want to pause here just a minute because economists are universally in agreement that the unemployment numbers right now understate true unemployment. And the reason for this is the way unemployment is officially calculated, and it's actually calculated from a separate survey the federal government does. They survey about 110,000 people every month. It has nothing to do with the number of people filing for unemployment compensation, which most people think that's where we get the jobless numbers. And in order to be considered as unemployed in those numbers, someone has to A, not have a job, B, want a job, and C, actively be looking for work, like going out on interviews, sending out resumes, et cetera. The problem is during the virus, a lot of people who are out of work and want a job, they don't feel comfortable looking for work. Or they've got a child who's home from school they have to take care of, or they have a loved one who's ill. So we're pretty sure that the unemployment rate, the real unemployment rate, I'll call it, is not currently around 6%, which is both the national and North Carolina levels, around 6.2. It's probably 2 to 3 percentage points higher. So we're not looking at 6% on unemployment, we're looking actually at 9% likely. So just keep that in mind. The job market is not as rosy, if you will, as these numbers would suggest, again, because of the way we measure unemployment. Next slide, Christine. Now, the impact on the job market has not been the same for each economic sector. If you look on the left-hand side, and I think most of you know this, hospitality and leisure sector has been slammed. In fact, that sector lost half of its jobs, 50% in April. It's come back a little bit, it's down about 25% now. Personal services, the same thing. So those, of course, those two sectors, a lot of face-to-face contact, a lot of personal interaction. And of course, we've actually had some closure requirements for restaurants. So all that is affecting those two sectors, and they've actually been slammed. You look at some of the sectors on the right-hand side, financial services, professional jobs, government, even construction, they have largely stayed open. Many, in my profession, education, I've been able to continue doing everything I normally do, teaching, giving presentations, writing, doing research, because of the power of the computer and internet. Same with financial services, same with government. Construction was deemed an essential service, so those folks have been out there still working on the roads, et cetera. And most of those sectors are actually, they did suffer job losses initially, but they're about 100% back. And so we do have this dichotomy in the labor market where some sectors are still very much struggling, other sectors are back. And unfortunately, if you look at these two columns, most of the jobs on the left-hand side, or a good percentage of them on the left-hand side, tend to be lower paying jobs. My first job was in the restaurant area, where my common phrase several times a day was, "Do you want fries with that?" But that was my entry-level job, and then I worked up. On the right-hand side, financial services, professional jobs, government jobs tend to be higher paying. So we've had a further exacerbation, if you will, of income inequality as a result of this pandemic. Next slide. All right, now let me turn to what the federal government has done, primarily federal government, to help us survive during the pandemic. To date, and I need to update this number, I apologize, I missed this, but the federal government has spent about $4 trillion of money, all borrowed, in trying to help businesses, PPP, payroll protection plan, help household stimulus checks, augmentation, unemployment compensation, and a whole host of other programs, trying to keep people and businesses afloat, or at least some of them afloat during the pandemic, so that when we get through this pandemic, we still have an economy. I think that's been the major concern. And again, the tally right now is about $4 trillion. President Biden is rumored, we don't have an official bill yet, but it's rumored that he wants to have another almost $2 trillion to put into this mix. This has all been borrowed. And so those of you who are concerned with borrowing, your concern will go up. I should say, if there was ever a time to borrow, now would be the case, because interest rates are very, very low. And in fact, if you look at government spending on financing the debt, because interest rates are so low, there's actually a smaller percentage of our economy going to finance the debt today than there was 10 years ago with a much smaller debt. So that's the power of low interest rates. Now, in terms of how much money has come to North Carolina out of that $4 trillion, it's about $39 billion. It's not come and just dropped in the state budget. Again, it's been dispersed in specific ways as dictated by the federal government. Next slide. Federal Reserve, one of my favorite agencies to follow because they have the power to create money. They have been very helpful. Interest rates are already very, very low, but they've lowered them even more. The Federal Reserve also set up some lending plans that some businesses and governments have taken advantage of. And the Federal Reserve has been very helpful to the federal government in buying a lot of the debt that's been issued. That $4 trillion, again, all borrowed. So the Federal Reserve can create money and go out and simply buy a lot of that debt so that we don't have to borrow the money, for example, from China. Now, this is where I'll give you a little, some investment, I won't say concerns, but just kind of funnel this into your investment decisions. There are two worries here with what the Federal Reserve has done. One is that all this money printing, will that eventually cause higher inflation? When I took my first economics course, which I think is now 52 or 53 years ago, I remember reading an article that was assigned by a very famous economist, Milton Friedman, who's now passed Nobel. I think he was the first winner of the Nobel Prize as an American. He had a very simple explanation for inflation. He said inflation results when there's too much money chasing too few goods and services. It is buying is exceeding supply. And there are a lot of folks, and I'm sure a lot of you are, since you're investment savvy, you read a lot of things in investments. You've got Guy to guide you, but there are some people out there, economists and financial people, who are worried that we might have a tick upward in inflation. Right now, inflation is running at an annual rate of about 1.5%. Their forecast maybe could go as high as 3%. Now, it could be a lot worse. When I came to NC State in 1978, inflation was in double digits, 12, 13, 14%. So I'm not talking about that, but we are talking about a significant uptick. And of course, that does have impacts for investments. So that's something maybe for you to watch. Another concern is speculation in the stock market. Stock market likes low interest rates. That is, people who are selling stocks and people who are investors in stocks like low interest rates, because when interest rates are low, that makes bonds less lucrative, money market funds, CDs less lucrative, because they all pay an interest rate. And a lot of people say, hey, I'm not going to go there. I'm going to go into the equity market where at least you can get something. And there is some concern, and there are some numbers that suggest maybe the stock market is too high for the fundamentals, and that there may be some pullback. I'm not predicting that, not predicting when, how much, et cetera. I'll leave that to Guy. But I do think, again, that is something to be concerned with also. So far, it's not showed up. The market was up again today. I think all the major indices set records today. So we don't see anything on that front yet, but that is something to watch, and there are various strategies, of course, to deal with that. But you have your expert guy to guide you through that. Next slide. Now, there's been some talk about concerns at the state and local level in terms of budgets, because unlike the federal government needs money and they don't have it in tax revenues, they go borrow it. States can't do that. For example, North Carolina can borrow money only for certain things, primarily capital projects like school buildings or roads or bridges, et cetera. Same way with locals. So you may have been reading about a lot of concern at the state and local level around the country if we're going to see some cutbacks in those state and local government programs, because they're not going to have the money coming in because of the pandemic and the pandemic-induced recession. Well, for North Carolina, there's good and bad news on this. Firstly, at the state level, North Carolina is one of, I don't know, maybe one or two states that actually has a lot of money in the bank. Actually, it's with Treasurer Falwell, but it's savings. We have right now $4 billion in savings in unspent, untargeted money at the state government level. Now you might say, where'd that come from? Well, it came from two places. One, North Carolina for several years has had something called a rainy day fund, meaning in good times we put some money aside, and that recently that fund was up to about 1.2 billion. The other roughly 2.8 billion. Where did that come from? Well, it actually came as the result of an impasse that we've seen in the last couple of years between the governor and the General Assembly. Governor is a Democrat, General Assembly controlled by the Republicans. The last couple of years, they have not been able to agree on a budget. Now, in the old days, and by old days, I mean probably about 10 years ago and beyond, if that didn't happen, if they didn't agree, we wouldn't have a budget. And I can remember many times at NC State where we were looking in August, coming back for classes in August, there was no budget, and we wouldn't get paid. If they hadn't gotten to a budget, we wouldn't be paid. No state worker would have been paid. Well, couple of years ago, our state said, "Man, we don't want to have that strain. So let's go ahead and say if the governor and the General Assembly can't agree on a budget, we'll just continue the previous budget." Well, that's what's happened over the last couple of years. But what that means is the previous couple of years budget, I mean, like in any budget, usually your budget numbers go up just by, even if inflation's only 1%, budget numbers go up. We get more people moving here, so you get some more revenue. And what's been happening, it's been very, very odd to see this. During this pandemic, North Carolina has actually seen its revenues growing faster than its expenses at the state level. So we've got money there. Now, it's up to the General Assembly and the governor how to use it, but I think we are probably maybe in the best shape fiscally of any state in the nation. Now, so local government's another picture. I think if we're going to have a problem with cutbacks and layoffs, it could be at the local level. Now, one thing to watch, of course, is among the elements that we think will be in President Biden's proposal for another COVID-19 stimulus package, 1.9 trillion. I think he has in there, what's been leaked, he has in there about $250 billion to go to state and local governments. So if that happens, obviously the problems at the state and local level, fiscal problems, will not be as great. So whether you're for or against that, and I'll let you decide, that could be a savings, if you will, or a savior, if you will, for especially local governments. All right, next slide, Christine. All right, let me get into the part where I'm looking ahead. I do something called a leading index for the state. It's constructed very much like the National Economic Leading Index. What it's supposed to do, it's not giving you a picture of the level of economic activity. It's giving you a picture of growth, forecasted growth, 4 to 6 months ahead. So if the index is going down, growth is going to slow. Index going up, growth is going to speed up. And if you look at the far right-hand side, you can see a big drop in the index. Early last year, that was signaling a slowdown in growth, and actually a negative growth, it turned out to be, due to the pandemic, due to the recession. But then more recently, this number's been going up, signaling that better days are likely ahead for the North Carolina economy. Next slide. I'm going to show you two forecasts for two major economic measures that all states use. One is GDP. GDP stands for gross domestic product. It's a number that allows us economists to aggregate all aspects of economic activity and production across all sectors into one number. In North Carolina's GDP pre-pandemic, if you look on the far left-hand side, was around $512 billion. These are annualized. I think we're the 9th biggest state in terms of GDP. You can see a big drop in the second quarter. Remember, that was the height of the pandemic-inspired recession. We have had a rebound for North Carolina, as most states, in the third quarter. We don't have numbers beyond that. But I'm showing you my path. Actually, this is based on latest forecasts from the Federal Reserve. Now, I do think we're going to have a little dip in GDP in North Carolina in the fourth quarter due to the resurgence of the virus. Nothing like we had in the second quarter of 2020, but look for that. But then I'm looking for growth, 2021 and then beyond. And key here, if you look at the number for 2021 fourth quarter, which would be the third number over from the right-hand side, 521 billion. Notice that's higher than the 512 billion that we had in the first quarter of 2020. So we should be back to pre-pandemic economic activity in North Carolina by the end of the year. Now, that doesn't mean that nothing happened during the recession. All that growth that we lost is never going to come back. But it does mean that in terms of our aggregate economic activity, we think we're probably going to be back full steam, or at least the full steam we had pre-pandemic toward the end of this year. Now, next slide, Christine. It's another matter with unemployment. Here's my path, predicted path for unemployment. Again, you can see the big jump in the second quarter, improvement since then. Now, notice, I'm actually predicting, even though I think the economy is going to grow in North Carolina in the early part of 2021, notice I'm actually predicting the unemployment rate will rise. And you might say, Walden, did you get your numbers mixed up? Why is that? Very simple explanation. Remember, I was telling you about how unemployment is calculated and how we think that right now we have a lot of people who want jobs, but they're not counted as unemployed because they're afraid to go out and look for jobs, or they simply can't look for jobs because they have home responsibilities. Once the economy gets better and once we get confidence with more people having vaccines, once this surge hopefully gets under control, a lot of those folks are going to go out and look for work. And until they get jobs, they're going to be now included as unemployed. So that's why I think we can easily have a situation early this year when the numbers come out where unemployment goes up, even though the economy is improving. And we periodically have that. That's just not unusual. But then after that, I think the jobless rate's going to trend downward. But notice, even by 2023, I'm predicting we're going to have 5%, or actually more than 5% unemployment in North Carolina, much higher than the 3.8% we had pre-pandemic. And I think there are two reasons for this. One, a lot of the companies that people work for, especially in hospitality, like restaurants, are not coming back. There have been some estimates out of MIT, no slough institution, that the bankruptcy rate among small businesses could be as high as 38%. Amazing. And so people who had jobs there, they're going to have jobs to go back to. And I think especially in the restaurant industry, that's going to change a lot. And I'll talk later more about that. The other thing that I think we're going to see is that a lot of businesses are going to say, boy, if I could get by without people, as many people, and use machines or technology to do these jobs, then I don't have to worry about next time we have a pandemic, people getting sick and being closed down if I can continue operating without as many people. And so I think we're going to have a move, and we've already seen this, and I'll give you some examples later, but where businesses are going to have an incentive, if they can, to install technology, machines, et cetera, and not use people. And so that means that we're going to have an elevated unemployment rate. All this is to say that I think one of the challenges North Carolina, as well as most other states, will have in the coming years is we're going to have a lot of people who find they don't have a job, they don't even have an occupation anymore, and they're going to have to get retrained. And they can't afford to take 2, 3, 4 years in community college or four-year college to get retrained, because a lot of those will be middle-aged. They got families, they got responsibilities, so they're going to have to get retrained fast. And one of the things I'd recommend is that we do all we can to encourage businesses who are hiring to do on-the-job training, do apprenticeships. And in fact, I spoke to a group yesterday about this, a business group yesterday about this, and we have some good apprenticeship programs and on-the-job training programs in North Carolina, but I think we're going to need to do much, much more. Next slide, Christine. All right, now let me move into the final part of the presentation. And this will take some time. And I'm watching the clock because I do want to keep some time, maybe 10, 15 minutes to take your questions. Now what I want to do is go ahead and talk about what this pandemic-inspired recession will mean for permanent changes in our economy. How will the post-pandemic economy be different than the pre-pandemic economy? Now, one, and I'm sure when I go through these, all of you will have heard about this, or many of you will. One is that there's a lot of talk, or there's been a lot of speculation about whether globalization will be curtailed. Globalization simply means that countries trade more with each other. And the numbers indicate that since 2000, in this century, since 2000, the rate that the size of globalization, the size of international trade, has gone up, I think, 2 or 3 times. And of course, the big difference for us was trade with China. We didn't, 20 years ago, we weren't trading hardly at all with China. Now we're trading a lot. They're our biggest trading partner. And of course, it's mainly one-sided, them selling to us rather than we selling to them. But there's some people who have speculated that, hey, especially regarding China, the virus came from China. And I think most experts think it did. It either came from a wet market or it came from some issues in a lab. And it came from China, and there's a lot of suspicion. Did the Chinese hold back? Did they not tell us, et cetera? Could it happen again? So there's some are saying, hey, why trade with China? Why trade with other countries? We're a big country. We got a lot of things here, a lot of resources, a lot of smart people. Why don't we go back to the old days where we made everything here? Although I understand the sentiment of that, I don't think we're going to turn around on globalization. I think it's too lucrative. Just think about a lot of the products that you and I buy that would likely be a lot more expensive if we didn't take advantage of comparative advantages in other cities and in other countries. So I think trade is still here, but I do think there are going to be two areas. Excuse me, just a minute. I think there will be two areas where we may see some changes. One is in the medical supply area. One of the things that we found out, we being the country found out when the virus took off, is we were underprepared in terms of medical supplies. Remember all the talk about ventilators and getting ventilators, masks, gowns, et.cetera. In fact, there's a story that I think is true, but it's a little bit of a story in the sense that there was no direct report on this. But anyway, when we were in dire need, we being the country of masks, India is a big producer of masks. Now, they had their own issues with the virus, but apparently President Trump called Prime Minister Modi and said, hey, can we buy a bunch of masks from you? And Modi said, no, we need them. And however he did it, President Trump got Modi to agree to sell us the masks. And we don't want to be in that situation again. So I think we're going to have probably, it might be through federal incentives, a big move to stockpile ventilators, masks, and gowns. And both of those could be opportunities for North Carolina. We're a manufacturing state, more so than most states, so we can do ventilators. We're a textile state, we can do masks and gowns. So there may be some opportunities there. Second thing I think in terms of trade is supply chains. Even before the virus came here, when it was in China, you may remember that there's a big province in China called Wuhan. A lot of manufacturing goes on in Wuhan, and a lot of companies in the US buy inputs, parts, if you will, from Wuhan province. Well, in about a year ago, actually a year and a month ago, December, January, a lot of our companies here were not getting parts from Wuhan because Wuhan was shut down. Well, again, the notion is, do we want to risk that again? So there may very well be some interest in the U.S. in building up some of the domestic supply chains, and again, that could present some opportunities for North Carolina as well as for many others in the country. Next slide, Christine. I alluded to this: humans versus machines. Economists are not known as being very popular or very dynamic, certainly not as rock stars. But in 2013, there were two economists out of Britain who published a paper that really made them rock stars because it went like wildfire all over the world. And what they said in the paper was that they examined the occupations that we had in place in 2013. They looked at each of, I think the people in my business divide occupations in about 750 categories. These two guys looked at each of those 750 categories, and they made an assessment of what in each of those categories, what's the likelihood that what happens in that category in terms of human work could be replaced ultimately by machines or technology. And the catchy result that, again, made them rock stars in terms of attention was they said 50%. They predicted 50% of the occupations that existed in the world in 2013 will not be done by humans in 2040 because of the advancing technology and machinery capabilities. So they coined a term called technological unemployment. They said there's going to be a lot of technological unemployment. We got to be ready for this. We got to be ready to retrain people for new jobs that will develop. Many people think the virus has just ratcheted that up because, as I gave you the illustration of the restaurant. Restaurants have been closed down. One reason being a lot of people work in close quarters. So one person gets sick, you can't risk, you got to close the restaurant down. Let me give you another example. Around, I think it was late April, I got a call from some national reporter, I forget what the paper was. And she wanted to talk to me about North Carolina and how the virus was affecting North Carolina, particularly the job market. And I said to her, well, North Carolina, I said, one of the sectors that's really big in North Carolina is food processing, particularly meat processing. I said, we actually have the largest meat processing plant, some call it a slaughterhouse, in North Carolina, in a town called Tar Heel, North Carolina, in Bladen County, largest food processing plant in the world. Heavily labor intensive. In fact, there have been some breakouts of COVID-19 there, but food processing was deemed an essential service, so they continued working. And when I told the reporter, I said, this is a perfect example of a sector that will be ripe for introducing technology, primarily robots, to replace people working on the line who are cutting and trimming meat as it goes by on a conveyor belt. I said, not going to happen right away, but I said, this is a perfect example. Eventually, robot developers will be able to figure out how to do it. And people in these jobs will have to find something else to do. No sooner, almost, than I hung up the phone, actually a couple weeks later, I was reading some national periodical, Times, Washington Post, forget which. And I read a little article that said some plant, I think it was in Nebraska, was beginning to introduce robots into their food processing plants. Iowa and Nebraska have a lot of food processing plants also. And I thought, my gosh, it's happening sooner than I think. So this is an example of what I'm saying, that I think this is going to happen in a lot of areas. For example, I've not been in a hotel since the pandemic, but I've read that New York hotels, you're likely now to see robots cleaning rooms rather than people. So this is something that I think is going to be accelerated as a result of the virus, and goes back to my previous comment about we need to be ready to retrain people very, very quickly. Next slide. Big implications for education. That's the sector, obviously, I'm in. Last semester, fall semester, Chancellor Woodson, after a 2-week experiment with students back on campus, said, nope, didn't work. Kids didn't behave. He didn't use those words. I'm using those words. We're going to all online education. And the nice thing about NC State, most universities, is we've had a lot of years experience with doing online education. So it wasn't a big deal for us. I will say it's not, many people think, oh, that's going to be a piece of cake rather than teaching kids in person. Actually, it's not. I don't find them save any time by teaching online than I do in person. But we had a lot of that going on. And right now, this semester, we opened up Tuesday. I mean, we're way down in terms of number of on-campus students. We're still teaching the majority of students online. And we'll see, fingers crossed, that kids behave better versus what they did last semester. But anyway, so university level, online education, remote education, I mean, that's been with us, and it'll probably get to be a bigger part of university experience. I think where the focus and question is for K through 12. Now, a lot of K through 12 systems that were shut down for on campus or in school teaching, they went to remote teaching. They didn't have any experience with that. And many of those systems, things did not turn out well. And you've read a lot of articles about that. I think that's a little, my view is that we haven't given that enough thought or enough time at the K through 12 level. There are actually fabulous online programs for teaching. I've got a friend in the College of Education who showed me just absolutely fabulous programs. So I actually think at the K through 12 level, I would expect down the line, parents will have an option in K through 12, just like a lot of students have at the university. Do you want to do online, stay home and learn, or do you want to go to campus? So I think teleeducation, as many call it, or remote education, is probably here to stay pretty much at all levels of education. Next slide. Teleworking, that's been one of the big stories of the pandemic. Pre-pandemic, these numbers are from Stanford University. Pre-pandemic, about 8%, only 8% of workers worked either full or part-time from home. Everyone else got up in the morning, drove to their job, worked an 8-hour day, whatever, drove home, or took mass transit. Only 8% stayed at home. At the height of the pandemic, which would have been in April, May, 40% 40%, again, estimated by Stanford University, of workers were working either full-time or part-time from home. Now, the question is that going to be maintained? Is it going to go back to 8%? What's going to happen? Well, you've probably read a lot about this. There are people who love working at home and say, I hope I can continue to do it. There are people who hate it. There are businesses who love it because, hey, if people are working at home, we don't have to spend rent on an office space. There are businesses though that worry about, well, what's going to happen to that collaboration, that spontaneous collaboration that takes place when people pass in the hallway or someone just drops in your office and says, hey, I got a question. So I don't know that it's for everyone in every business, but the experts, and again, the experts I'm referring to, Stanford University, think it is going to be a bigger part of our economy. I think their numbers right now suggest that it's pulled from 40% of workers, it's back to about 30% now. But there's some forecasts by some who say this could go up to 50% of workers. So that is obviously a trend that to watch, but I think this has probably been the trend that the pandemic has most given a boost for, because we were that 8%, we were slowly seeing that go up, but it was going up at a snail's pace. So this is going to be very, very interesting to watch to see if the pandemic, the post-pandemic economy is significantly different in terms of where people actually work from. Next slide, Christine. I mentioned teleeducation, telemedicine. Now the medical people or the economists who study the medical sector say this is coming, is coming. And what was meant here is rather than you going to a doctor's office, setting the waiting room for half hour, 45 minutes, then going and sitting in the examination room another half hour. I mean, that's normally my experience. And then finally seeing an MD. You just do it all online. You have your annual checkup online, et cetera. Now, obviously, there's some things you can't do, but the people who think this is the wave of the future think there's a lot that can be done. I'll give you a personal example with this. My wife had a little medical incident right after the shutdown orders in March. Not life-threatening, but enough that we needed to get medical attention to it. So we called our physician, and Mary said, well, here's what's going on. I need to come see you. And the physician said, well, I'd love to see you, Mary, but can't. Office is closed. She said, get on your portal. Let's set up an appointment on the portal. And take some pictures, send me some pictures before we have that meeting online, and we'll see what we can do. And it actually worked wonderfully for what Mary had. Now, obviously, it doesn't work for everything, but there are a lot of people who think that this may be a good thing because it might be a way to at least contain or reduce some medical costs. And think about the time saver. I think I'm a time person. I hate wasting time. And every time I go to a doctor and I think about, all right, yeah, it's going to be 15 minutes with the doctor, or it's going to be an hour and a half waiting to see the doctor. I think about all that wasted time. I try to work, but it's oftentimes hard to do. So look for this, telemedicine. A lot of people think this is going to be the wave of the future. They think we're all going to be wearing these smart watches that keep track of all our vitals. That information gets set automatically to our physicians. So it could be a lot of shakeup in the medical area. And again, the pandemic has simply, this stuff is not new. It's just the pandemic has elevated it, brought it more in focus. Next slide, Christine. Drone delivery of products, delivery of services. I mean, I talked about delivery of services like education and medical care. During the pandemic, people have been ordering out, or at least a lot of people have ordering out. The Walden's not. Fortunately, Mary loves to cook, so we continued our practice of eating pretty much all our meals at home that she prepares. I'm not allowed in the kitchen. But at least for preparation, I can clean. I'm allowed to go clean up, of course. But we have a neighbor across the street who's a young person. He's 40. And he started ordering all his meals during the pandemic and have them delivered. And he said he loves it. He said, I'm going to continue this even after the pandemic's over. So many think that delivery of all sorts of things that really picked up during the pandemic will stay elevated. Maybe not as high as it was during the peak of the pandemic, but will stay elevated. Now, I'll only say one thing about drones, because whenever you talk about home delivery, you find some people talking about drones. I mean, most of us, if we get a home delivery of something that comes in a truck or a van or whatever, I'm a big buyer of books, as you might expect. So Amazon's coming to my house about every day, and but dropping off a new book. But there's long been a discussion in the industry about retailing industry about drone delivery. The retailers like drones because the estimates are that it reduces the cost of each package delivery by about 80% over vehicle delivery. Now the question is, are you going to be able to have drones flying around a dense area? I'm not sure. The FAA actually last week, 2 weeks ago, just made the first, there's a whole series of steps and hoops that delivery companies have to step through in order to get this approved, but they made the first approval level for drones. So watch for that and see how far that goes. Next slide. And then lastly, I think this is the last of my major ones, is the pandemic going to change where a lot of people would like to live? The 21st century so far has been the century of the inner city. Inner cities, I don't know what your background is, where you came from. I grew up in Cincinnati, Ohio. And when I was growing up in the 50s and 60s, downtown Cincinnati, why would you go down there? That was when you went to a mall. Downtown Cincinnati had big time problems, very rough neighborhoods. You wouldn't want to go down there for anything. After I was long gone, but in this century, downtown Cincinnati has totally revived. And there was a neighborhood there, it was called Over the Rhine, old German neighborhood, I'm half German, that was just a horrible place to go, just dilapidated and high crime rate, et cetera. That is the place to live now for young people. So what's happened in this century is young people go to the big cities, get educated. They are delaying marriage, they're delaying partnering, they're delaying having children. When they graduate, they want to stay in jobs in the big cities where all the excitement is. Question is that going to change post-pandemic? Big cities where a lot of spread, high density, a lot of spreads come. There are problems with big cities. Housing is expensive. If you don't live there, you got to commute, long commutes, et cetera. And so the issue is with remote working, perhaps permanently higher, people may be able to cut that link between living in the inner city. They can live out somewhere where housing is less expensive, work from home, they can have stuff delivered to them. Yeah, they occasionally go into the big city, maybe for an entertainment event, but will we see perhaps inner cities not collapse, but growth there, not continue at levels they have now, more growth in the suburbs, exurbs, and even rural areas. I was on a call yesterday where the topic was the urban-rural divide. And there's some hope that maybe if we can get high-speed internet in the rural areas, that people who want to work remotely and they want elbow room between them and their neighbors, maybe that'll spark a renaissance of rural living. All right, next slide. And I think we're at the end. So let me go past here because I do want to leave time for questions. So next slide, Christine. All right, Guy very kindly said that I was going to market my books. I do have 2 new books out. Well, relatively new. They came out last August. One, a serious book, and the other, more of a fun book. The serious book is this one, Real Solutions. I think this is a perfect, hey, I got to sell books. This is a perfect book for right now with the new administration talking about doing a lot of different things in a lot of areas. What this book, it's really taken me my 43 years to write this book. I take all of the hot topics that we hear about: income inequality, healthcare costs, budget deficits, debt, Social Security, taxes, et cetera, all of them, environment. And I give you a nice review of the issues. I give you a nice review of what people are talking about in terms of addressing those issues. Then I give you my ideas, which are my real solutions. So that's now available. And then the second book, next slide, Christine, is with Mary. We've written 3 novels that have economic content. We call them economic thrillers. And people ask me, well, Walden, gosh, you do some fiction too? And I say, hey, I don't plan it. eyes pop in my head. I like to write. Mary's a good writer, so we collaborate sometimes. This is a book I wrote last year that was based on a lot of the political events going on in the last several years, some very serious events, but I've tried to weave them together into a political thriller. I've got 3 characters that you're rooting for in the book, for good things to happen, but some thrilling things, some of them scary, happen to them in the course of navigating our very challenging political environment. So that book is called Disunia, and that's also available. All these are available at the Barnes & Noble, Amazon. I've got a website, Michael L. Walden, Michael, and then another L, then Walden. So I commend those to your attention. And with that, Guy, we've got 10 minutes. So shoot me some questions and I'll try to answer them.
Absolutely. First of all, let me suggest to our staff, we're going to get a few of your books and we're going to have some kind of a contest for people to win some of your books.
Oh, okay. Thank you.
You're welcome. We'll try to get to as many of these as we can. As you might imagine, Dr. Walden, the last few months, most of our questions have been about the political changes that we saw culminating yesterday. And about half the people were very concerned with the new administration and the tack that they're taking. And I will admit the other half of our clients were very concerned 4 years ago. And of course, they would have been wrong to have sold out of the market 4 years ago, and we think that would be the case right now. So what's your opinion about, from an economic standpoint, impact that may have economically, of course?
In terms of the market, you want me to specifically address the market or just in general? I think the Biden administration, I think President Biden and his people telegraphed some of their plans. We are going to have another big COVID proposal. That's probably going to be bullish for the market right now because it's infusing money into the system, and we've still got a long way to go to get people and businesses back. So I think that's probably going to be bullish for the market. But I do think there's some long-run impacts that I mentioned too: inflation and potentially the market getting overbought, oversold, I guess you could say, speculative. I never try to time the market, so all I can do is raise some flags there. You may have seen the dollar has been going down recently. I think that's also due to money flowing out of things like bonds and CDs, et cetera, dollar denominated and going into the market. I don't read that as any concern about the relative strength of the U.S. economy. Another thing is tax rates. I think it's pretty much a sure bet that when the Biden budget is proposed, and budgets, 2 parts of budgets, tax side, spending side, you'll probably see proposals to raise taxes, personal income tax rates on the higher echelon, and you'll see a proposal to raise corporate income tax rates. There's also, I think, probably going to be a proposal to raise the income limit to which the Social Security tax is applied. So that may very well affect some of your clients. The president is also, in fact, I guess he signed an executive order, at least partially or maybe totally implemented this, $15 minimum wage. And I'm all for helping people at the lower end of the ladder, but I think the concern here is, well, if you're a business and you're paying $7.25, now you have to pay $15, you're going to do a calculus and say, is it worth me to keep that $15 person, or can I substitute some technology or machinery and lower my costs? And that's the concern, and no other than the federal Congressional Budget Organization, Congressional Budget, CBO, which is a nonpartisan group in Washington that looks at all things budget. They're forecasting 1 million to 2 million jobs lost in the nation if the $15 minimum wage goes through. I've actually got some ideas and real solutions about how to address poverty and how to help people at the lower end of the income ladder. That's different than doing the minimum wage, but I think that's probably going to be pushed. Now, all these things, of course, and that's what makes this interesting. We have a very divided Congress. We have a House and a Senate. Senate is actually 50-50. We have a House that's close to 50-50. So I think President Biden, who has a lot of political abilities, he's been there over 40 years. He knows a lot of people, particularly in the Senate. He's thought to be an engaging person who, of course, is a guy who's going to wrap his arm around you and talk and try to get some compromise. I think he's going to need all his political skills to get some of these initiatives pushed through. One more that I think is probably on the table, I read something about this today, is an infrastructure package. Actually, President Trump tried for years to get this through, never got through. The Biden administration, I think, is probably going to do another try. This is probably going to be money primarily going to roads and bridges, but maybe money in there for high-speed internet. It would take about $150 billion to do high-speed internet for everyone in the country, or those people who don't have it. Maybe some money in there for electric grid, maybe some money in there for alternative energy sources. So look for that. And I think the reason that's a little different is you can make an argument a lot of those things have a very high rate of return. I mean, you think of them as investments, but that's obviously going to add more to spending. I did see something today that rumored that when that infrastructure plan gets pushed forward, however many trillions it's going to be, one way that the federal government may, or the Biden administration may try to pay for it is with a carbon tax, something that's been talked about for a long time. How that would work, you pull up and get gas in your car. There's some calculation that's already been done that for how many gallons you buy, how many units of CO2 you're emitting, and they're going to put some price on that. Maybe it may turn out to be 2 or 3 cents per gallon of gas. So watch for that.
Okay, good answer. This is a comment from one of our clients with one question following up. It may be more for us than you, but it says that he and his wife have enjoyed the series that we've been doing since September. They start their happy hour at 4 o'clock rather than 5 o'clock with a very good glass of wine. But the question is, can we move it up to 3 o'clock next time?
The happy hour? Yeah.
Yes. So we'll have to consider that. Last question. I think this is maybe a little bit in line with what you said earlier, but the first question was, what signals or changes would an individual investor look for to decide if they were going to change strategies or investments without making an emotional decision? So are there any macros that you would suggest we should be looking for?
Any macros? Well, the guy, that's really down your belly look. But again, I'll just repeat what I said. Watch for, I think the biggest threats in terms of things that affect the markets, of course, economic growth. But I think we're on a path for economic growth. So I think that's going to be there. But inflation, if we get unexpectedly higher inflation, that's probably going to be bad for the markets. Higher interest rates. Now the Fed controls some interest rates, but certainly not all. We've already seen some interest rates go up. That would likely be bad for the market. And I'm waiting, and we haven't seen any sign of this yet. I mean, we've had an extraordinary increase in debt, about $4 trillion. It's probably going to go to 5 or 6 trillion, an increase in debt. We're well past. I think we're at 107% of GDP
right
now. And the market's shrugging right now. And I think that's because of low interest rates. If interest rates start to go up and if inflation starts to go up, that may compound their concern with all this additional debt. So those are the things that come to mind right away.
All right. I want to comment. You mentioned earlier an oxymoron. You said you've written a couple of economic thrillers.
Yes. Well, yeah, about, I don't know, it's probably 20 years ago. My wife and I were driving up to see her sister in Charlottesville, and we were chatting along the way, and I always try to find better ways to teach students. And I said, there have been a couple economists in the country who've written economic murder mysteries, and they've weaved in economics. And I said, I think I'm a good writer. I think I can do this, but I'm not going to have anyone die. So they're going to be thrillers. So we actually have 3 economic thrillers. I think the first one was macro mayhem. Then we had micro mischief, and then we had fiscal fiasco. So those, obviously the macro ones talks about the macro economy, microeconomy, and the fiscal is more financial. So those are still out there. Those are on my author site on Amazon, for example. So yeah.
I love the titles. The other thing you said that I've got to correct you on, you said economists are not considered rock stars, but you've been a rock star in North Carolina going back to the early 80s since I've been here.
Oh, thank you.
Certainly, you've been a rock star for our clients for many years now, and we greatly, greatly appreciate your participation.
My pleasure. Thank you. Thank you.
All right, for all of you online with us, remember we do this every Tuesday and Thursday. Let me back up. The first and third Thursdays of each month. The next one is going to be another thriller, if you would. Easy online access to your investments using Investor 360 and ShareFile to securely track performance, share files, get price quotes, and more, featuring our own tech expert, Alan King. So that will be, we get a lot of questions about this, and Alan will be able to demonstrate exactly how that works. And Alan is indeed a technical expert, but if he has any difficulty, I will be there to assist him. Now, after the laughter dies down a little bit, I'll move forward here and let you know we will be obviously recording this. You'll be able to go on our website and get this. That next event, by the way, is February the 4th. And again, Dr. Walden, cannot thank you enough for participating today. Thank you. Take care.